This video is an instructional video for the UW Extension Stocker Closeout worksheet that can be found on the Wisconsin Beef Information Center. This spreadsheet was released in the spring of 2020 and was prepared by Bill Halfman, Ryan Sterry, and Amanda Cauffman. It was reviewed by Dr. Garland Dahlke at Iowa State University and Dr. Megan Nelson at UW-Madison Division of Extension. This is a closeout worksheet, and what it's designed to do is take all the revenue and expenses itemized from a group of stocker calves that have been out on pasture and put it together to look at what costs of production are and profits and losses. This is one that we would use after the group of animals has been sold. We have a different spreadsheet that is more of an enterprise budget stocker spreadsheet that can be used for doing projections. It's much simpler and easier to plug in and change different figures in this one. So keep that in mind when you're using this tool. This is to evaluate after the group has been sold. This stocker closeout spreadsheet is designed for groups of cattle that have a pasture component as a significant part of their enterprise on the farm. If someone is looking to background cattle all in a dry lot situation and would like to do a closeout on them, we have another closeout spreadsheet tool called the feedlot closeout spreadsheet tool, and that particular spreadsheet will match up much better and would be the one we would recommend that they use for backgrounding calves on in a dry lot situation. So as we look at the spreadsheet, up at the top here, we start with some general instructions, and the blue cells are the cells that the user enters values in, and then the yellow gold colored cells are the ones that are calculated. And if we also look towards the bottom of the spreadsheet, you will see that there are a number of tabs that are all part of this process. So we start with income, and basically what we need to do is enter in the date the animals were sold, how many head in the group, and the total weight in hundredweights that were sold, and then the net revenue for the group. That means that's the dollar value at the bottom of the check after all the commission and the other expenses have been subtracted for that transaction. That just saves you the hassle of having to enter in commission and other things later on. So there we start out with our income for the group, and then we start going through the expenses. In our next section, we have our cattle purchased expenses, where we can enter in the date, number of head, total 100 pounds of that group, or 100 weights, of that group, and what we paid, the total amount that we wrote the check out for that group. If you are taking animals that were raised on the home farm and using them as stockers, what you want to do with those is enter those in this line as well, and then put in a opportunity cost. If you would have sold them at that time, how much would they have brought you in income, so you have an opportunity cost assigned to those animals. As we slide down here, once those things are entered in, those figures from above and those weights, then we learn some of our general performance indicators. We calculate the total 100 weights of gain, live weight gain. It calculates a death loss based on the number purchased versus the number sold, our average start weight, average final weight, pounds gained per head, and average daily gain. As we move down for additional expenses, it directs you to the different tabs at the bottom where you would go to enter the information, and then comes back to fill this out. For the top part of this, upper part of this section, we have the total cost is reported for several of these. Then it's broken out on a per head basis, a per 100 pounds of gain basis, and a per acre basis. So here we would enter in the total number of acres of pasture used with the group. And then as we move down, we assign an opportunity cost rent for the pasture, if it's pasture that we own, or if it's pasture that we rent, how much money we were paying per acre per year. And then it calculates all those expenses out. The fence and the machinery are going to come from some of the other tabs. And then all of these pasture direct expenses that you see here will all be filled in other tabs, but here they're broken out into those total per head, per 100 weight of gain, and per acre basis. Then we move down into other livestock costs. And here there are some that come from other tabs, like purchase and harvested feed. But then here's where you would enter any interest costs if you borrowed money on the cattle to buy them, and then any interest costs for feed or other direct expenses on those expenses for these cattle and go in these two lines. If you have any bedding, for instance, some people will buy groups of calves. They'll have them on dry lot for a little while to kind of get them up and going and straightened out, so to speak. Any bedding that might have been used with this group, whether in dry lot or if they had to get pulled off the pasture for a little while due to other problems, any total bedding would go in here. And again, some sort of a value opportunity cost or whatever you paid for the bedding would go in here. Veterinary, the growth promotants, they all come from other tabs. And then we do have other supplies, miscellaneous kind of a category here. And then transportation, what did it cost for bringing the animals to the farm, moving them to pastures, if you had any transportation costs there, and then any transportation and costs incurred for the sale of the animals. You enter those here, and it does the work and divides them up. And then we have a summary. Labor comes from another tab, and we'll talk more in detail on that at that tab. We do have a yardage cost. So if or when the animals are on the dry lot, then we would assign a yardage cost and however many days that is. And that's yardage per head per day that you enter in here. We have a yardage calculator spreadsheet that is available at the Wisconsin Beef Information Center website that you can download to assist you with calculating your yardage costs for that purpose. Then we come to our total cost of gain per hundredweight. So this is what did it cost for those pounds of gain that the animals gained while you own them. And then we get down into our summary here where our total income, our variable expenses are shown. Then we show our returns to unpaid labor and management and capital, which also includes the yardage. Then we take our fixed expenses out, and yardage would be one of the fixed expenses, along with some of the other pasture expenses above. And then we have our returns to unpaid labor and management. Here you will also notice that we go from up to this point, we talked about cost per hundredweight of gain, but once we total it up at the end and look at the final bottom line, then we look at this on a basis of per hundredweight of pounds sold. So that sold part includes the weight that they weighed when you bought them plus the weight that they gained while you were there. Up until this point in time, above here, we're just looking at what did it cost you to put the weight on them. And in the last section down here, you can plug in here how much money would I like to make per head. And then you can use this. If you use this with enough groups of cattle, this closeout, you'll get yourself established a track record and some benchmarks for your operation that will help you make decisions looking and utilizing the projection tool. But this allows you to say, okay, I'd like to make $50 a head in this example. What would I have had to sold those animals for? Could I be able to sell them for more with some improved marketing or something to make that? This is overview of the main Stocker Closeout page.
The second tab of the Stocker Closeout spreadsheet is where you will record the fencing and pasture expenses. There are three sections. The first section being where you will record costs associated with forage quality and repairs, such as seed, herbicide, and fertilizer. Seed may include pasture establishment depending on your crop rotation. It may also include seed costs for interseeding of legumes. Some of these direct costs are not acquired every year, but should be prorated over the expected useful life cycle. For example, seed that costs $65 with a 3-year useful life, the spreadsheet will calculate the annual prorated costs. You can then allocate what percent of the seed was used for this stocker group. and the spreadsheet will calculate the total seed cost to this group of stockers. In moving down the spreadsheet, you will find where to record the permanent and temporary fencing. You may lump costs together or itemize them out for each type of fence, but we do encourage you to keep the permanent and temporary fencing costs separate. These sections are much like the previous section in that they take into account the item's useful life and the percentage used by the stocker enterprise. For example, the annual depreciation expense for the barbed wire fence used for the perimeter is generated by inputting the cost and the useful life to figure out the annual depreciation expense. You can then further allocate out what percentage of the barbed wire expense was used for this group of stockers. We would also like to point out a link that we embedded into this tab that will lead to a fact sheet by Iowa State University about determining fencing costs to be used at your convenience.
Our next tab in the budget is machinery and equipment costs. We want to emphasize that the machinery equipment costs placed in this tab are really supposed to emphasize the costs for on pasture. These related expenses for if animals are on dry lot, for receiving program, or anything like that should be going under the yardage expense, which was highlighted on the first tab at the beginning of this video. Just like the other tabs, in the blue cells here, we have user inputs, and the yellow cells are calculated. So in this particular example, we have a tractor that we're using to do some clipping weed control for our pastures. We start with current market value. In this case, it was $19,000. Estimated ending or trade-in value, years of useful life, and we use all that to get to what's this annual depreciation expense for that particular piece of equipment. Now, we don't expect the stockers to pay entirely for this tractor unless it's only used for pasture maintenance in this example. So next we ask you to think about, put a good estimate on what's the annual use of that particular piece of equipment towards a stocker enterprise. In our example here, this is a utility tractor used for lots of other things. So we're saying, maybe 7% of the time it's used for maintaining the pastures that our stockers are on. So with all those user inputs, we come up with a cost of this particular group of stockers of $84 for the use of that tractor. You can do this for, we have a brush hog here. If you're using equipment for repairing or installing fence or whatnot, those would be appropriate expenses to put in this section here. If we scroll down a little bit, we can do the same thing with a machinery lease. The main difference is we're not going to have that trade-in value. We're just looking for what the lease payment is, and then an allocation to this group of stockers. And then finally, we wrap up with related expenses for maintaining machinery equipment. We have your fuel, utilities, and what's that annual expense? What percent of that are we charging back to the stocker enterprise to get a group allocated to this particular group of calves? Same with related machinery repairs. So if you're running multiple groups of stockers, this takes a little bit more work at the front end to set up, but we'd encourage you to save some of these expenses, as if you're doing this for a second, third group budget, you can reuse a lot of this information.
The next tab is the purchased and harvested feed costs. And at the top of the page here, we have an embedded Adobe Acrobat file that contains a paper from Iowa State University that shows estimated different storage loss factors for different feeds that you can use to help plug numbers in for that factor in as we're accounting costs here. So we have the feed section broken down into two different sections. We've got one section where it's the receiving program feeds, if you have a receiving program where you bring them in, have them in dry lot for a while with mixed groups of calves, get them up and going before you put them out on pasture, or you purchase them before the grass is green and need to hang on to them a little bit, whatever the case may be. What you do is you enter in the feed and the total tons, and everything in this section is based on the tons. So the total tons of feed that were fed to these animals, our storage loss factor, and then price, dollars per ton as fed. So obviously for purchase feeds, you know what you wrote the check out for. For homegrown feeds, you would assign a cost to those feeds or what you could have sold them for rather than feed them to the calves. We've got our receiving program here, and it shows us the total number of tons of feed for the group, the number of days they were fed this, the total cost per head, and feed cost per head per day during that receiving time period. And also, in the next section talks about any supplemental feed when they're out on pasture, both purchased and homegrown. In this example, we show that they were fed a little bit of rolled corn, some mineral, and some trace mineral salt. And so again, the same concept as above, we put in the total tons that were fed to the animals, whatever the shrink loss factor is for storage loss, and then a price using the same procedure as above to give us that cost. Then down at the bottom, we put in there how many, it calculates how many tons of feed, and then and when we plug in how many days they were fed supplemental feed while on pasture, it does the same calculation, total dollars per head and cost per head per day in feed. And then it gives us a summary for both the receiving and the supplemental from above. Also down below here, we've got some tools to help if we're not sure what the price per ton is when we're used to buying things on a bushel basis. For example, we've got a shell corn price adjuster. We can plug in the cash price for standard corn, the dry matter percent, and it'll calculate out dollars per ton on an as-fed basis for us. Got one for ear corn if you happen to have ear corn, and hay and haylage. A lot of times we know what dry hay cost is. If we're using haylage, we can plug this in, and it's assuming some things for dry hay, and then we plug in the moisture, dry matter, percent for haylage, and it'll adjust that haylage price based off of dry hay into a as-fed basis, which is what we're looking for above. So this is an overview of the purchased and harvested feed cost.
The Vet and Pharmaceutical tab is where you can record expenses associated with growth promotants, pharmaceuticals, and veterinary services for both the entire group and on an individual basis. For each section, the user can input the date and/or time a product was given, the product used, and the total cost. With this information, the spreadsheet will calculate the total cost per head sold for the growth promotant section and the group treatment section. Once the user has input all expenses for the group and individual treatment records, the spreadsheet will also calculate a total for the all vet and health expenses, which does not include any implants or growth promotants. The user can also record withdrawal times by inputting the proper information. The withdrawal time columns are provided for your convenience. They do not impact the cost analysis if you do not wish to use them. At the bottom of the page, you will find a pharmaceutical cost calculator that can help calculate the cost per treatment. And at the top of the page, you will find an Adobe Acrobat file that is a preconditioning sheet to help record vaccinations and treatments for use when marketing these animals. All of the products and withdrawal times used in this tab are only examples, and UW-Madison Division of Extension does not promote any of these products over any others.
Next, we have our labor cost worksheet. This worksheet is divided into paid labor as well as unpaid labor in management. We want to emphasize that unpaid labor isn't included in the calculations in this particular spreadsheet. However, if you remember back to the first tab, you can enter a desired return that you'd like to receive for your labor on this group of calves. You can also enter the information for unpaid labor here to give yourself an estimate of what might be a reasonable number for that. Under labor, we can split it out into paid management as well as labor. For both categories, we're looking for the hours per week and the wage per hour. So in this example, for paid labor, we have 3 hours a week at $10 an hour, and we don't have any paid management in this example. We're assuming it's all unpaid management. So if we scroll down just a little bit here to the unpaid labor and management section, again, we have 3 hours of unpaid labor that we're valuing at the same $10 an hour. And we're putting about an hour of management per week into this group, just because management's a little bit more intensive, a little bit higher skill level required. That's valued at $18 an hour in this example. With all those inputs, in this example here, we have about $720 of paid labor management and about $936 of unpaid labor and management. Again, this unpaid labor and management, that $936 doesn't carry over into the calculations, but that's a really good number for you to know for yourself and to credit yourself for how much work you're putting into this group of calves. Our final tab in this worksheet is a print summary. This looks very similar to the first page that we started out with, but it's been condensed, a few lines eliminated to ensure that this prints on one page of paper. Most of the color cells have been changed to black and white just for ease of printing, but again, it gives you a good summary of your income, number of heads sold, your purchase costs, some of the key performance indicators as we go down, trying to follow a similar format as the first tab that we started out with. Again, gives us a performance summary, pasture summary, summary of other livestock costs, a summary of our labor, yardage, and at the end, our return to resources, our break-even sale price, returns on paid labor management, etc.